General Motors lifts 2025 profit outlook thanks to tariff relief and trimmed EV losses. General Motors announced a notable upgrade to its 2025 profit outlook, attributing the improvement to two main factors: a softer impact from U.S. import tariffs and a reduction in the losses tied to its electric vehicle program. The automaker now projects an adjusted core profit of between $12 billion and $13 billion for the year, up from the earlier $10–12.5 billion range. At the same time, the expected drag from tariff costs has been cut to $3.5–4.5 billion, a narrowing of the previous $4–5 billion estimate. The news sparked a 15% surge in GM's share price, marking the strongest single-day gain in almost 6 years. In a shareholder letter, CEO Mary Barra explained that while the company remains committed to its EV ambition, near-term adoption is progressing more slowly than anticipated. She warned that additional EV-related expenses are likely, but reiterated that electric models remain the company's strategic North Star. Earlier this month, GM recorded a $1.6 billion charge to reassess its EV investments and the lapse of a $7,500 federal tax credit for battery-powered cars further ease margin pressure. The quarterly report showed adjusted earnings of $2.80 per share, comfortably beating analyst forecasts of $2.31, while revenue dipped slightly to $48.6 billion. Rivals Ford and Stellantis also benefited, with their stock prices rising roughly 5% and 4% respectively. Despite tariff uncertainty, U.S. auto sales grew about 6% in the quarter, and buyers continued to gravitate toward higher-priced models with extra features. GM cautioned that future performance could be affected by supply chain hiccups, further EV-related costs, and higher warranty expenses, citing a potential disruption linked to chipmaker Nexperia. To bolster domestic production, GM announced a $4 billion investment across 3 U.S. facilities in Michigan, Kansas, and Tennessee, while competitor Stellantis disclosed a $13 billion U.S. investment plan. Although GM's 2021 pledge to transition to an all-EV lineup by 2035 remains on the agenda, Barra now emphasizes that customer demand will dictate the brand's future mix. EVs represented less than 10% of GM's total sales in the quarter, and the company confirmed the cancellation of its BrightDrop electric van program in Canada, expecting a related charge in the fourth quarter. Overall, the updated outlook reflects a more